Hi everyone, thank you for joining me. I will talk directly about which questions I will answer today. The first question and the most exciting one, what is the fastest way to reach financial independence? And I will look through two concrete examples of how to get to 1 million investing through investing in real estate or through investing on the stock market. I use this example because it is easy to follow with the numbers, not because I think that 1 million is a magic number for the financial independence. Financial independence is very personal. I will tell you what are reliable free resources to learn about investing. It is very important for me that all women I meet learn and start investing. And you don't have to join my courses. I'm happy to share information for you to learn. What is important that you start learning today and that you start investing soon. I will talk what is the safest way to start investing with little money, because I really don't want you to do any mistakes. It's very easy to make big mistakes in investing, and I really would like you to avoid these mistakes. And finally, I will also talk about something with high returns. But first of all, I would like to talk to you about the importance of investing. Investing is something we consider risky. We are, I think, even grown up with that idea that it's not for everyone. It's something where you can lose all your money, and investing is something we are very reluctant to do. Well, if we are not investing, we are guaranteed to lose money. And in fact, we lose lots of money by not investing. Inflation destroys our wealth. Because of rising prices, the value of the money we accumulate diminishes. And it diminishes slowly from one side, but actually drastically. This is an example how 1,000 euro diminishes its value in 20 years and in 30 years. This example is valid and for Spain and for United States or for other European countries. So our 1,000 euro or dollars today is only worth 640 in 20 years, and it's only worth half in 30 years. So if we are saving for the retirement, for the long term, this money will not be there, or at least it will be much less than what we expect. Investing is the only way to save your wealth. And it's also a way to grow your wealth. But today I want you to live with this urgency feeling that you have to do something to preserve your wealth to begin with, because otherwise you are losing money. Let's talk financial independence. Financial independence is something very personal. And today I will connect it with retirement, because at the end we're talking about the same thing. And we are talking about a time when we are not having maybe a regular salary, maybe we are not working because our health doesn't allow us, maybe because we don't want to have a regular job. So we don't depend on work to receive our money for living. So we depend on our wealth of something we accumulated, which gives us a regular allowance to live. Financial independence. It's a freedom from an employer. It is not freedom from money, thoughts, or money worries. What do I mean by that? I think we have kind of this dream that one day we might be so rich that we don't have to work and we don't have to worry about money. But having enough wealth or not being obliged to work every day doesn't really free us from money thoughts. In fact, the wealthier we become, managing our wealth becomes higher on our priority list. So we will never be free from money thoughts, and we will never be free about managing our money. And actually, outsourcing money management does not exist. What do I mean by that? We can hire advisors or we can hire some specialists to help us with something what we want to achieve without money. But this is not completely outsourcing in a way that we actually don't understand what they are doing. We're bringing them our money and say, okay, please grow my money. This doesn't exist. We really have to understand what kind of services we are asking, what kind of products we are being offered, what kind of returns we are expecting. Then we look at what results we get. If it's not good enough, we change the products, we change our advisor. We have to be in control of this process, as with anything else. So we are not ever outsourcing our money management. We are in control. Making wealth management your habit early on pays back. For me, wealth management, it is as healthy nutrition or regular exercise. It's very important. It's very important to have wealth management as a habit. Even though you might not consider your money as wealth, well, you have wealth and it has to be managed. And you have to do it regularly. And you will have to do it one day, whether upon retirement, whether at one certain point when you cannot work anymore, it will become very important. But starting later will be much more difficult. And maybe if you start too late, it's just too late. There is very little you can do. The same as with sports and nutrition. The earlier that you start, the more it is your habit, the easier it is for you and the better results you get. So what would be the fastest way to reach financial independence? That is very, very personal, as it is very personal how much money you need to live on. Some people are happy with relatively little money, and some people cannot manage with thousands or millions. So it is personal. But there are certain things which bring you closer or further away from your financial independence. There are many life choices you make which cost money and which bring you further or closer to financial independence. They are all your choices. Your profession, employment, place of residence, what kind of property you own or rent, choice of partner. Well, if there is one life choice which defines your wealth, is a choice of your partner. And here I don't want to talk about marrying somebody wealthy. I'm talking about having somebody who will be partner of many choices you make which affect your finances. Whether you have a big wedding, whether you have a car or two, what kind of vacation, and finally, of course, the kids, they cost money and they bring you further or closer to financial independence. So all these choices, they are complex life choices, but they affect your financial situation. To reach financial independence, you have to make it your life priority. If you make it your life priority, you still might need 10 to 30 years to reach your goal. But it is very well possible. It will always require support of your partner. And you don't have to be unhappy, but you have to make the choices. The earlier you start, the easier it will be. So the earlier you put your financial independence as a priority, though you don't want it very soon, I don't advise that you don't spend anything and you live as a hermit and just save money. No, but having it as a priority and having a certain plan, the earlier you have it, the better. So let's talk about the stock market. What can we expect from the stock market? And here my famous, the very famous character, Gordon Gekko, the evil Wall Street broker, he is asking us, how much money can you expect if you invest 1,000 in January 2021? And I received lots of answers from you about your investing expectations. Many people expected money to double. Many people said that they have just no expectations. For people who expect the money to double or triple, because these are the answers I got, I just want to say that you cannot run a marathon if you prepare for a sprint. What do I mean by that? I mean that investing is a long-term affair. Investing we're doing for the long term. And if you're working for the long term, you cannot have very high short-term expectations. Having high expectations for the short term really distort our view, make us do silly things, and prevent us from the smart decisions. So investing is something for the long term. You focus on the long term, and you also understand that it works better for the long term. And I will explain why. There is something which is called compound interest. If we invest 1,000 in January 2021, and we expect this money to grow at 10% annually, then in the first year, we can expect 100 euro as an interest on 1,000, 10%, 100. Not very impressive. I agree, sounds boring. Why even bother? Not impressive. Why should you actually start doing it? Second year, though, you see that it's a little bit more. Why? Because we get interest on an interest. So it will not be already 100, but 110. So now we have a little bit more money in the as an extra that year. And in third year, it's even more. And fourth year, a little bit more. And actually, by the 10th year, we already managed to grow this money 2.5 times. And an additional amount we get in the 10th year is 260 euro. So this is much more than the 100 euro we got in the first year. Years pass by and this amount starts growing much quicker. You see, in the 14th year, we already reached 4,000. So our money already is 4 times more than what we invested. By the 19th year, it's 6,000. But when it really starts kicking in is after 20 years. Well, it's a long time, but that's why investing is a long-term game. But by the 30th year, this 1,000 grew to 15,000. And that year, only in 1 year, we get 1,500 euros. So we get actually more in 1 year than what we invested initially. So how do I get to 1 million investing on the stock market? Well, if you get 10% annual return and you have 2% inflation, then you can get to 1 million in 30 years. Starting when you are 30, you start with $30,000 and you put 250 every month. You get to 1 million at 60. It is a conservative calculation from one side, but it's also, I think, is realistic. 10% return, this is an average annual return stock market gives us historically. Over the history of more than 100 years, people who stayed in the stock market for a long term get 10% annually. So this should be your expectation for the investing. Investing for the long term, little steps, but it gives good results with consistency. And during my courses, I explain much more in detail what kind of products we buy and how can we invest in the stock market to achieve this kind of results and what kind of system we have to build to achieve it. Now I will talk about reaching financial independence through real estate investing. I will take an example of a property valued at 200,000, which we are purchasing with a bank loan. So we are paying down payment of 50,000 and the rest is financed through the bank. Our mortgage is at 2% interest. We are financing 80% of the property value and we will be renting this property at 1,000 euro per month. So this is an example I am using. You may ask me if this is a realistic number for Europe. It really depends. You really have to look for properties like this. It's not that you can find this kind of return on investment very easily, but it's very realistic. It requires work, it requires research, but it's possible. I have personally this kind of properties in the Netherlands and in Spain, but it took me lots of time to find them and to find companies which can bring me this kind of properties and help with managing these properties, because that's also one of the big parts of the real estate investment, managing the properties, managing rentees and everything. But this is possible. So when we buy our first property, for the next years, we will have 5,000 annual profit. This is a profit after we pay the mortgage. So in 10 years, we will accumulate another down payment so we can buy another property. From that moment on, we will be receiving annual profit of 10,000. So we will be able to buy our third property in the 15th year. From that moment on, it's pretty quickly how we can get to the fourth property and to the fifth property. And again, with these numbers, it is realistic. These are realistic, rather conservative numbers. It's possible to get it quicker, but this is in principle a safe way of how the wealth can be accumulated through buying properties to rent. So we will have 5 properties by the year 21, and that gives us a gain of 1 million worth of properties. Once we pay the mortgage, our annual profit will be 50,000, and also our income can be like this as well. So this is possible. Now I will talk of how you can learn investing by yourself. Again, it's my objective that women learn investing and start investing. And I am very determined to help many women, not only the ones who will buy my courses. So how can you do it yourself? I will start with what you shouldn't do. You shouldn't use Google search, because by just Googling investing, you get lots of wrong information. You get lots of confusing information. It's either overwhelming or pure wrong. So don't Google investing. And avoid listening to financial news. It doesn't make you much wiser. It brings much more confusion than anything else. What can you do? You can learn accounting. Accounting is very important for investing, for a business owner, and there are great accounting courses. It doesn't have to be long, it doesn't have to be complicated, but you will be surprised how much knowledge you will get from a very simple accounting course. I always recommend accounting courses on LinkedIn Learning. There are two American brothers. They are absolutely great. Great videos, very quick, up to the point, really worth looking at that. And then if you want to search something, you don't search Google, you search Investopedia. So every word you don't understand, any financial concept, you search it inside Investopedia and you get reliable, well-explained information. And inside each article, if there are more words you don't understand, it gives you links so you can go back and so you can really research a lot. But the most important with learning investing by yourself, it's adjusting your expectations to a long term and adjusting your desire to make quick profits. Focus on learning and focus on small steps you can do and see this as something you are doing for the long term. You're not doing it for the next few months. What will be the safest way to invest with little money? First of all, what you shouldn't do. Don't look for cheap stocks. This is one of the first mistakes everyone makes. No, I have little money, so I will find something cheap that at least I can buy something. Don't do that. Don't search for the next Tesla. It's very difficult and it's not the point of investing. Never buy any financial products you cannot explain to a friend or relative what it is. If you're not able to explain it in simple words, don't do it. So as a beginner investor with limited funds, you are not doing cryptocurrencies, you are not doing any currency products, derivatives, nothing like this. This is not for beginners. And again, don't expect your money to double fast. What you should do, you should create a process and a system for regular saving and investing. It's about a habit and it's about continuity. It's not about randomly doubling your money, because you double your money once, another time you might not be so lucky, and then you will not do it again for the next 5 years. So it's not about that. It's about regularly getting this 10% annual return and then reinvesting it again and then reinvesting it again. And for that, you have to have a system. And you have to have a system for saving. You have to have your automatic savings installed. You have to have the system how you buy your investings on a regular basis. It is about a system. And if you want to understand what you should be investing in, research and understand these three words which are written here: passive investing, index investing, and dollar cost averaging. So these six words, this is what you should be focusing on in your learning process. So with this slide, I give information to everyone how they can invest money by themselves with relatively little money. Can you reach high returns? Yes, you can reach high returns. What is this? This is a graph of NASDAQ 100 index. So these are 100 biggest technology companies in the United States. And this is the returns they gave in the 30 years between 85 and 10. And this is the returns they gave in the years between 1995 and 2020. So you can see what is possible. So how can you learn with me? You can sign up for the stock market crash course. What would it be? That would be 5 months access to the learning platform. This platform gives you plenty of materials on personal finance and investing. Lots of articles, videos, some exercises, so you can learn just being on that platform. You don't have to Google, you don't have to research. Being on the platform provides you with plenty of learning materials. It is self-paced and but it will also contain some learning assignments. So I will give you some guidance, what you can do, what you can start with, what you can research, but I will not be insisting. You can do it or you can skip doing it. It's up to you. And what is most interesting, you will have stock market simulation to check your emotions. And here I would like to emphasize that simulation serves to check your emotions. Simulation doesn't help you practice in investing. You cannot really practice in investing because any success you have in the past doesn't guarantee you anything in the future. Or vice versa, your failure in the past, it could actually help you avoid issues in the future. If you failed in the past, it doesn't mean that you are bad at it and you should abandon, no? But when you start investing, when you start doing things, you will see how you feel, you will look at your emotions, and that's very important. And you will have online support from me. The support will come through Google Classroom or WhatsApp. We'll have to define, depending on the group, what support and how I can answer your questions. But I will answer your questions. And otherwise, if you're really determined and you really would like to start and you really want to start, then you should join Investment Accelerator program, which is starting on the 1st of February, next Monday. The price of this program is $175, and I can absolutely guarantee you that if you work with me for 5 weeks, this will be money very well spent, and it will be your first investment. Why should you join Accelerator? Because you want to have a strong boost to start investing, because you are serious about it. And my purpose for this course is to make you excited, motivated, to start feeling that you can do it, to get the tools, to get the knowledge. So I will give you a boost to start investing during this month. That's why you are paying, and that's why you're joining this course. You will get personalized help with learning. And during the seminars are not webinars, these are live calls. So you are there, I answer all your questions. You can interrupt me during my presentation and you can ask me the question. And we work through your finances during the personal consultation you get, and I help you with your doubts, issues all through the process. You're opening your investment account and you don't know how it works, you call me and I help you during that moment. Joining Accelerator will really put investing on your agenda and priorities list. And that's what I was talking about. If you want to have financial independence, you really have to become serious about it. The whole program is constructed that you are serious about it. That's why we have weekly meetings. That's why it's not recordings. It's a meeting. You show up and you listen and you ask questions. You get your homework and On the next lecture, you have a chance to ask questions about the homework you were doing. You get plenty of learning materials, you have simple explanations from me, and you have support. Afterwards, you get recordings of all the videos so you can go back and listen again if you didn't understand something. So it is for people who really want to get over with it, to start investing, to really understand this thing. And Investment Accelerator also includes the learning platform I was talking about from the stock market crash course. So you can practice your emotions as well. Why should you join Accelerator today? Because you really want to start investing. I'm not gonna give any discounts because this price is already a very, very special, reasonable price for the amount of support in information you will get. And if you really want to start investing, you should join today, because then you will already start feeling committed to the process. And this week you will spend bringing your finances in order, telling the others that you are really doing it. So you are committed, and you pay the program and you will start learning next week. I really hope you will join the program, and otherwise I just hope that you start learning one way to another. Be active on the Facebook group if you want, ask me questions. I also give personal consultations, so you can also have a personal consultations with me and learn at your own pace and have personal lectures from me as well. So just do something, because it's very, very important. Thank you very much.